Just looking at some of the data out today, retail sales are rising 3.4% year on year in November. That's compared with the revised 0.9% expansion in October. Stats SA saying on a month-on-month basis, sales were up by 0.9%. Let's delve into what the numbers are telling us. John Luce, household and consumer strategist at FNB, joining us. Thanks so much for joining us, John.
Hi, Sam.
So what are the numbers telling us? Because up in November and very muted growth in October.
Well, I always like to smooth them out a bit with a 3-month moving average for the simple reason, depending on how many trading days there are, you can get volatility in the monthly figures. So 3.4% up on November a year ago looks pretty good in real terms compared to 0.9% in October. But you take a deeper look, you put it on a 3-month moving average basis, and the year-on-year growth, the broad trend is still downward. The year-on-year growth in the 3-month average has moved to 3%. That's still good, and we're looking at for the year as a whole last year, 4.5% odd retail growth, slower than the 5.9 of the previous year. So there's been a broadly slowing growth trend, but we're still relatively healthy. But I think what we're starting to see, broadly speaking, is increased pressure on real disposable income growth, which has been caused by a slowdown in economic growth in the latter parts of last year, as well as, I think, a slowdown in investment income growth, which shot back after the recession with a bit of a lag in 2011 very strongly, and that's probably normalized now. So a lot of things are normalizing, and with it, that sort of mini recovery that took place in 2010 with a huge interest rate stimulus is now broadly starting to wear off, and we're having slowing retail growth as we approach 2013.
Now, just looking at all the indicators, if you had to take into account where consumer debt levels are right now, perhaps consumer confidence levels, surely shaken by what we're seeing in the domestic environment, where you've got concerns around Amplats retrenching workers, concerns around renewed strike activity. That's what we are seeing right now in the mining sector, farm workers strike. I mean, how does this all play into the outlook for spending this year?
Well, I'm never quite sure how much those affect consumer confidence levels, but they certainly affect the economy. We've seen a lot of disruption to the economy. So you went down to 1.2% annualized growth in the third quarter, and it could have even been lower if we look at the manufacturing figures now in the fourth quarter. So very little economic growth to speak of, and that must have a dampening effect on real disposable income growth. Coupled to that, if we go over to debt, very strong growth in consumer-related debt has been also partly fueling this consumer mini-boom, I like to call it, since 2010. If you take out mortgage credit, which is growing at 1-something%, the rest of household credit, which is much more consumer-related, by November was growing at 25% year on year. That is extreme. That's like the boom years. And a lot of that being used to also fuel this retail. Now, I don't think that can carry on at that growth rate, because the debt to disposable income ratio has started to rise again. So I think there are going to be credit growth constraints, increasingly so, on the household sector in 2013.
Now, we've got the retail sales figures, which are, of course, a very important indicator of household consumption, 2/3 of the economy. We've had manufacturing data coming through as of yesterday or today, PMI figure coming through, and that really disappointing, back below 50. Contraction there. You've got mining data which shows contraction. Overall, what's your assessment right now of the economy?
Well, we start the economic year on a very weak footing. Very little growth in the fourth quarter of last year, and that's how we've headed into 2013. There may be there are signs, some signs, it's not that convincing, but that the world economy may just be starting to recover after a little lull last year. So that's good news, I guess. But I don't think that's going to affect the slowdown in retail and consumer spending growth, that part of the economy, for the simple reason that has outperformed economic growth. We've had 4s and 5s and 6% real consumer spending growth, whereas the economy has been more 2-3% odd. And I think in 2013 that has to come down to earth and come down more into line with the economy. So we could see the economy gradually improving a little bit off a very low level of growth late last year. That as the year goes by, we could even see it slightly higher, the growth, than the possible 2.5% of last year. But I don't think that's going to turn the annual retail growth or the consumer spend growth around. I think that is still going to be lower than what it was last year.
We'll leave it at that. Thanks so much for joining us. But as you say, retail sales coming back down to earth in 2013. John Luce, household and consumer strategist at FNB.